Hello and welcome to Finextra. I'm Josie Waite and I'm here at Sibos 2017 in Toronto. And joining me is Cian Burke from HSBC Securities Services and Stu Taylor from Algomi. And we're talking about corporate bond liquidity. Thank you both very much for joining me.
Thank you.
Thanks ever so much.
Stu, why is it important to improve liquidity in corporate bonds?
You've got to acknowledge that probably the vast majority of bonds actually trade less than 5 times a year. So you have a situation where if a market-making bank takes a bond onto their books, they've generally got to hold that for a long time. Since the regulations came in a few years ago, the capital constraints for holding that bond have made that a very expensive proposition. It means the customers of the banks, therefore, are not getting the market-making provision in the vast range of bonds that are out there. And so really, for them to get any sort of trading or any sort of way of exiting a position, they're needing to look for other avenues.
Well, I mean, liquidity is a fundamental part of any trading market and trading activity, and as Stu says, that fundamental capital constraint has just meant that the market makers are not prepared to hold the inventory that they once did, and there are very clear signs that liquidity has dried up quite considerably. There was an FCA survey that was done which suggested that pre-crisis the trading activity as a result of requests for quotes or orders was about 65%, and that's gone to about 20-25%. So that's a marked deterioration in the liquidity that exists in that market.
Tell us about the collaboration you have announced here this week.
So we've announced a really exciting initiative between two large global custodians, ourselves, HSBC, and the Bank of New York, who hold a huge portfolio of the credit inventory that we were talking about through our role as custodians, so clients' assets held on our books. So what we've done is partnered with Algomi to provide an initiative where we can anonymously publish that data, if you like, to market makers that sit on the other side, accessing the infrastructure through Algomi's technology, and hopefully have a kind of a response where they can request information about those bond holdings, get a sense of interest from the asset holders as to whether they're prepared to sell, and then through the infrastructure basically make a price, make a market. So increase the liquidity fundamentally in that credit market through the custody assets that we hold for our clients.
The key thing to note here is that most of the data in this space is fundamentally private. This is data that generally cannot be shared with the broader market. And so what Algomi deals in, and where I think we've been able to help, is providing what we call a signpost system, where we basically indicate where the data exists and drive workflows towards that to the benefit of those end clients. And so for a bond holder who's custodied maybe with HSBC, they can start to get alerts on trades, on bonds that they own, and get involved in transactions during the transaction rather than maybe after the event. And so very, very empowering to bondholders who have previously been sort of almost locked into buy and hold situations.
And that anonymity is really, really key. I mean, as a custodian, the privacy of that data is a fundamental aspect of what I do. I mean, it has to be anonymous, but as Stu says, that ability to be able to access inventory and at least sense interest from the bondholders is kind of a key development.
How will this deliver value to your clients?
Well, to my custody clients, as Stuart said earlier, look, it gives them the ability to be able to more actively trade assets if that's what they want to do. You know, historically it's almost been a buy and hold kind of position, simply because the liquidity that sits in the market, the expressions of interest effectively dried up as the market makers have pulled back from holding that inventory. So it gives them, I suppose, a little more flexibility in terms of trading, investment strategies and decisions.
On top of that, I mean, our client base is both asset managers and banks. It's all about educating risk. Generally, a lot of the liquidity issues are really basically come from the fact that actually risk knowledge has basically been sort of pulled back, and a less confident risk means less risk is generally taken. So if we can actually introduce the fact that there are avenues to get trades done, we can point them to where the bondholders are, we can point risk takers, be the portfolio managers or the banks themselves, that actually they have a valid avenue to get a trade done. It makes for a more confident risk environment, and a more confident risk environment means more risk is taken, but in a more educated way that can really help facilitate the liquidity situation in the market.
So how is this going to develop going forward?
From a custodian's perspective, it's very early days, right? There's two major global custodians involved in this initiative. We're really going to improve liquidity, and this is really going to take off and make a fundamental difference to the liquidity that exists in the market, then I think we need to get more global custodians interested in the proposition, because clearly as you expand that global custody horizon, you expand the assets available to trade. So I see this as growing and developing, but with other global custodians coming to the party as we kind of demonstrate success in terms of increasing that liquidity.
Yeah, I think that's right. And I think really what we're trying to do is really develop almost a map of the market that is actually accessible for all the participants. And so the good thing about starting with two such large firms is that it gives us a great start to this initiative. But I think going forward, what we're looking for is just very efficient ways to hop across the market, so a trader can very quickly find out how to get a trade done. There's lots of great research and ideas and pricing about theoretical trade concepts, but actually the execution is always the challenge. And so by providing a very clear roadmap is really what we think this does. And as Cian says, really as we bring on more custodians, we increase the breadth, the scale of this initiative, we think it has really the power to be truly transformative.
Thank you both very much for joining me.
Thank you, pleasure.
Thank you.
And thank you for watching.